bear case and we put the spotlight on ONGC, Megha, who tracks this sector and the stock closely, joins us to lay out the case for us. Megha, it's difficult to lay out a bear case today when the stock is up 5%, but let's see you do that.
I have some pointers that need to be put into light. Yes, the note by Jefferies has instilled on strong uptick in ONGC today, and it's fairly bullish, but there are certain bearish points that need to be made. Up first is on the point of realizations. Now, the removal of the special additional excise duty is positive for the company. It does not limit or cap ONGC's realization at $70 per barrel. However, the outlook on crude oil prices in general for 2025 remains bearish. An estimate of $65 to $75 is what we've been gathering from brokerages. So the removal of the SAAD does not do much. The second factor that Jefferies has noted is its subsidiary HPCL. Now there's an improved outlook for HPCL from a refining standpoint as well as marketing, because crude prices have been trending lower. However, HPCL continues to see heavy losses on their LPG sales and no government relief has come into play and may not till the end of FY25. This third part is the KG Basin, which is a key asset that ONGC has marked for its future growth, and the ramp up is expected in production by Q4 FY25 and Q1 of FY26. Current oil production is around 25,000 barrels per day, but it's still much lower than what is expected for Q4 at around 45,000 barrels per day, and the company needs to bring in 5 new wells to do so. Furthermore, as per Novama research, the company bears high drilling costs for every delay it makes in its production. It's substantially lowered its production targets for the asset since FY18, and it sees an average high drilling cost of around 650,000 per day as per the brokerage. The next part is the volume guidance. Now, management as well as analysts remain confident that ONGC will meet its production targets this year. However, it's key to note that post the Q2 FY25 call, the ONGC management had already reduced its total production target for FY25, and it's missed its crude oil production target consistently for the last 6 financial years and has met its gas production targets only 2 out of the past 6 years. Then we have the stock performance. Well, the stock is down 30% in the last 3 months and is tracking crude oil price declines, and it's currently at attractive valuation as per analysts. However, P valuations are still at a 3-year high despite being a single digit value price to earnings ratio. And lastly is the analyst outlook. 66% or 20 out of the 30 analysts that track the stock do have a buy call on the counter. However, 5 have a hold rating, 5 have a sell rating, and the consensus target of around 313 rupees is still around 9 to 10% lower than the 52-week high that we've seen on ONGC.
Well, Neeraj, if you felt that the bear case was tough to do, I think Mihika really did a good job of it. So thanks, Mihika, for that. Very interesting in terms of how guidances have been missed over the last 6 years and how any delay could well drag the P&L for those many quarters. Neeraj, which side of the fence do you sit on this one?
Actually, I am neutral on ONGC in the sense I don't really recommend investing in ONGC, because for the last so many years, if one was holding this since 2014, it was a similar price in 2014 also. So if one can't be a very long-term investor in ONGC, I think this is one stock where one can play the buy on dips and then sell the rallies. And especially since this year, the guidance for or the expectation for crude prices is not that great. There's expectation that crude prices can come down further. I think there'll be again pressure on their margins and their realization. So I feel that if you get some dips in ONGC during this year, then one can buy and maybe play for recovery, but not at these levels.
Okay, so not at these levels, net. Kunal Shah, your view with regard to ONGC?
ONGC on the technical charts has been very strong. The pullback, what we got, and this pullback has been with volumes. Now the previous swing high for the stock is at 264, 265 mark. And so this is the immediate target what I see on the upside. And once it is sustained above that, then we might see that the trend has reversed for the stock, and then it can go higher towards 274, 278 mark.
Okay, so those are some levels, of course, given strong returns over the 12-month period, but outside of that, in terms of the shorter term, 9, 6 and 3 months, been in the red, the stock been under pressure. But what are the top 3 stocks on our radar today? Varsha joins us with that list.